Welcome to a brand new trading week. It's Monday, the 13th of July. I am Boston Omofaye, and we're happy to have everyone join us on Frontier Opening Bell this Monday. Ali Kansacho, the founder and CEO at Rich Frontiers Management in Nairobi, Kenya. Good morning, Ali. How was the weekend?
It was lovely, and morning. Good to see you, Boston.
Yeah, we understand the weather is getting a little bit cold in Nairobi. Is it winter already?
It is winter. It's been cold now for about 6 weeks. But you know, we're high altitude, so it feels cold. When you look at the temperature gauge, it says 13 or 14, but it feels a lot colder than that. So it's very pleasant here.
Ain't you guys lucky? Ijoma Onyeka is the industrial goods analyst at Vertical Capital Management here in Lagos. Ijoma, I'm sure you can use some cold weather, like at a higher altitude, like Ali is having in Nairobi.
Yeah, definitely. Well, we are having our own version of somewhat cold weather in Nigeria with the rainy season and the non-stop rains. But ours come with a sprinkle of flooding in several key parts of Lagos.
It's interesting. A bit of cold on both sides of the continent, West Coast, East Coast. It's just that we would rather do without the Lagos flooding, which is perennial each time it rains in Lagos. And most of last week it was raining, and of course Lagos is a coastal city, so with a whole lot of buildings and whatever drainages problem, that's a whole problem. Talk about infrastructure another day. Let's hit the ground running about the market. The global market is looking positive this morning, so I'm a little bit excited about the risk on that we're seeing to start the brand new week from Asia now into Europe. A bit of earnings coming through from the U.S. banks later today. Some of the meetings with OPEC later in the week, and the ECB meeting also on Thursday. It looks like a very busy week is getting started. But this is a bit of taking you through where we finished off last week. The Nigerian market was 0.12% on Friday in the negative territory. Ivorian market, the BRVM, 0.27%. The Egyptian market was stronger, 1.79% to the upside on Sunday. In Kenya, 1.10% for the Nairobi Nairobi Securities Exchange. That's a very strong volume we saw last week. South African JSE softened on its 55,417. Take that away. Go to the Kenyan market. The stock market activity jumped 180% last week. The Kenya Commercial Bank will be selling 5-year, 10-year, 15-year treasury bonds to raise about 60 billion Kenya shillings this month. That looks like its calendar. Meantime, Mozambique June inflation down to 2.69% from 3.02% in May. The Total gas project is ongoing in that region. Ali, tee off the show for us as always.
Thank you so much. So, yes, we had a huge spike in activity at the Nairobi Securities Exchange. Most of it was on Friday. This was related to foreigner selling of Safaricom shares. Safaricom makes up more than 50% of the market capitalization of the Nairobi Securities Exchange. As you know, it's our main telco. And we saw very heavy foreigner selling on that stock. It actually broke down a key level, and the fortunes of the Nairobi Securities Exchange are very closely tied to the fortunes of Safaricom. The issue in the background is the fact of the extension of free money transfer for amounts below $10 US. M-Pesa is probably responsible for...
Free money has its benefits. Free money has its benefits.
It has its benefits for the customers, but it is a significant portion of the M-Pesa revenue share. M-Pesa is about 35% of Safaricom's total revenue, and sums below $10 are around 55% of that M-Pesa revenue. So I think we've seen some international investors disappointed about that extension by the central bank to year end, and that has been the catalyst for some offloading of Safaricom shares. But the trend is very similar to what you have in Nigeria, where international investors are divesting and local investors are tending to step up to the plate. But we should keep an eye on those developments. Central Bank of Kenya, of course, has been lobbing out billions and billions of bonds, T-bills, you name it. And this is all around the lack of private sector credit growth, the build-up of cash on bank balance sheets. Similar, again, I think, to what you're seeing in on the West Coast. But essentially, every single issue they offer is being oversubscribed 4, 5, even 10 times. And I think what they're doing is just tapping into this golden flood of liquidity whilst they can. I expect all of that to be fully subscribed. They've been concentrating in the short end of the market in 1-year bills and less. But this is an interesting extension of the maturity profile that they're doing, and they're doing it in good size. Mozambique, as you correctly said, has this enormous Total gas-based play. It's going to be a game changer, but in the meantime, we can see soft inflation over there. It's a very interesting market. We've discussed it before. We've talked about the insurgency in the north. There was, a stop-start behind this. There was that scandal with the tuna bonds, but they seem to have gotten over that. They restructured their bonds, gave people some gas warrants in that restructuring exercise. And, this is a real big deal as far as I can see.
Interesting views there about the Kenya's central bank doing a massive T-bills auction. We're expecting Nigeria's central bank to do a rollover of about 100, the debt management office to do about 100 billion naira a rollover of some papers this week. And then again, of course, we're looking at the Q3 calendar. So governments across the continent, from Mali to Mozambique to everywhere, they're trying to see whatever they can do to Egypt, raise easy money very quickly while the party lasts. Let's touch on very quickly with the Nigerian West African markets. A very interesting week on the Nigerian Stock Exchange. Some of the announcements relates to the corporate earnings we're expecting for Q2 and first half of the year. The banks have made some announcements. Non-banks are also announcing several board meetings, including those in the industrial goods sector. But the big story around industrial goods has to do with the cement, which is one big story. Meantime, Pan-African Ecobank Transnational has appointed a Cameroonian as a new board chairman. Mr. Nkocho is taking on, that's part of the decisions at his last annual general meeting. Meantime, the Ghana Stock Exchange records 262 million shares during the first half of the year, 6 months to the end of June. Nigeria Republic, just north of Nigeria, raised 27.5 billion CFA franc via TB's auction last week, and Senegal says its inflation rate is to 2% in June. Ijema Onyeka at Betiva Capital. When we talk about the Nigerian market, the industrial goods, we saw a bit of a movement in the volume for this week on Lafarge Wapco. Boa Cement was also in the news, despite a very major sell in the shares of MTN, which is a different company within a different sector. We're talking about the brick and mortar guys within the industrial goods space. What's the week like?
Well, we recall that last week was not a very great week for the industrial goods sector. Like the overall broader index, we saw a negative close last week, and this was this is basically due to investors preempting the poor second quarter result. We recall that because of the lockdowns that happened at the start of the second quarter of the year, we saw reduced construction activity across Nigeria. We saw reduced business activity leading to reduced economic activity leading to weaker economic prospects, which definitely have an impact on corporate capital expenditure spend. The real estate sector was also definitely affected, both from the commercial and the residential spaces. From the residential spaces, largely the luxury real estate sector has been affected significantly due to declining or depreciating wallets of the average Nigerian, and the commercial real estate sector has been affected due to reduced economic activity. All signs
So if that
point
is the case, sorry, Ijoma, if that is the case, why are the two largest cement makers, Boa Cement and Dangote Cement, at each other's throat about increasing output here, with Boa Cement looking at Adamawa State, and Dangote Cement looking doing more at Obajan? Why do you raise for more bags of cement when it looks like no one is buying?
Well, the answer to that question is that they are looking long term. In the near to medium term, the outlook for the Nigerian cement market is actually quite weak. There isn't a very strong growth story for the Nigerian cement market in the near to medium term, due to weak economic growth outlook. Even post pandemic. So pre-pandemic, the expectation was a sub 3% growth over the next 4 to 5 years. We had huge levels of government debt crowding out revenue. Capital expenditure budget was not as strong as expected, despite the huge infrastructure gap in Nigeria. So in the near to medium term, the outlook is not great. And post-pandemic it will remain that way. But in the long term, we're looking at a country of over 200 million people, with an infrastructure deficit that some estimate at around $3 trillion. We're looking at a cement consumption per capita that's one of the lowest across sub-Saharan Africa, and of course across the globe also. We're looking at a real estate market that is nowhere near its potential. Home ownership rates in Nigeria is one of the lowest in Africa. Rental rates are also quite low. Urbanization rate is also quite low. So there's a lot of economic prospects. There's a lot of long-term prospects for the infrastructure space in Nigeria, and so these guys are definitely trying to tap into it. Another thing that they are looking at is the export market. Adamawa, for example, like you mentioned, for Boa Cement, is at a key strategic location. It borders 3 major West African nations: Niger, Cameroon, and Chad. And they're looking to supply these markets the same way they are doing with their Kalambina cement plants in Sokoto.
Okay, I got 1 or 2 questions for you later, Ijoma, about these big cement companies' earnings outlook for the first half of the year. What's the thinking within Vetiva Capital? Let's touch with South African market, where the President Ramaphosa's administration is looking at some safety net for the embattled national airlines, South African Airways privatization. There could be some new money coming through. Discussions are ongoing with investors. Meantime, the troubled Eskom, the energy giant, says is launching planned power outages to control distribution. In Zambia, microfinance Lupia raises $1 million US to support financial inclusion, distribution to folks within the bottom of the pyramid. And on the Lusaka Stock Exchange, the first quantum released in the second quarter financials on July the 28th. That week's final week of July, that's very heavy in terms of numbers, including monetary policy meetings and announcements. In Namibia, the subject investment announced listing of 100,000 additional securities on the stock exchange, a very small exchange there. Ali, where are you stepping into Southern Africa? Are you stepping in from Joburg, Pretoria, or from Zambia?
So let me start with South Africa, with Pretoria. The President Ramaphosa yesterday made a national speech. He hadn't spoken to the nation, I think, for about 4 to 6 weeks, and painted quite a grim picture around the surge in the coronavirus. I can't remember the exact language, but it was pretty alarmist language. And I think, the country needed to hear from him. He's introduced a further extension, a curfew He brought in some further rules, and he's stopped the sale of alcohol. The issue with alcohol is really the fact that people tend to then utilize a lot of hospital space, right? They overdrink and then they go to the hospital. So what he's trying to do is take the alcoholic-related caseload off the hospitals, given the surge we're seeing in the COVID-19 cases. South Africa is top 10 now globally. And this has all happened in the last few weeks, predominantly in Gauteng province, which is where the financial markets are situated in Johannesburg. But interestingly, so far, mortality rates, they've had more infections than Italy, but far fewer people have died. And this is a lot to do with the theory that economists like Charlie Robertson at Renaissance Capital had, is that Africa, because of the demographics, because we're much younger, obviously not me, but the average brother of mine or sister, are much younger and therefore are much stronger when they are infected. So we're going to see this now play out in real time and learn more about it. The Rand has been very firm. There's this sort of risk-on atmosphere at the moment in the markets, which started about a week ago, where I think last time I looked 60, 70. Johannesburg Stock Exchange being supported by the gold price, which is above 1,800. And I'm expecting that to head towards 2,000 even by the year end, which will be supportive for South Africa. It is surprising that Eskom, in an environment where you've got level 3 restrictions in South Africa, is having power outages, because you would guess that, you know, with all those PMI numbers and industrial utilization numbers, the demand for electricity must be down. So it speaks to a much, much deeper malaise at the electricity company. Just to also mention quickly, Zimbabwe, the stock market is still closed, and I saw that there's a big argument going on between Old Mutual and ZANU PF. Old Mutual were very unhappy with some of the comments that came out of ZANU PF over the weekend. And then Zambia, interesting developments. The capital markets obviously still functioning, notwithstanding what is quite a stressful moment in Zambia's financial markets overall. And Namibia, of course, they resuscitated the airline, which was going to be closed, but they put it back. And there we have some further listing of securities on that stock exchange, but that's a small stock exchange.
Interesting. Thank you, Ali. Just a word or two from you on the Northern African markets in about a minute. But let me ask Onyeka very quickly what his outlook is for the Nigerian industrial goods, especially the cement giants, in just about a minute. What do you see on the board?
Okay. Thanks for the question. Like I said earlier, given the lockdown that happened at the start of the second quarter, we're not expecting a strong first half. We're not expecting a strong first half from the cement players in Nigeria. Of course, some players will perform better than others due to base factors. For example, Boa Cement, because of its weaker base, due to the fact that it only added another 3 million metric tons cement plant in Okwela in the second quarter of 2019. They're expected to have a stronger second quarter than the other players. However, revenue from WACO, revenue for Dangote Cement would be affected significantly by the lockdown. Of this, WACO will be the worst hit. They will be hit because they'll be hit worst because one, they are facing increased pressure from all sides across all their plants. Boa Cement, for example, has the Northwest region where they are the dominant player and hold a sort of pseudo monopoly in that region. And so despite the reduced demand, they will still have relatively decent cement sales. Dangote Cement, for example, in the North Central, have some sort of pseudo monopoly also, and would have some relatively decent demand from that. Lafarge, however, is facing pressure from southwest region of Nigeria, from Ogba Cement and Dangote Cement. And so with the reduced demand, they would also be feeling more competitive pressure from their key competitors. However, in the bottom, when we're looking at the bottom line, I expect that WACO will perform better than Dangote Cement because of the reduced finance costs that they're going to be incurring this time. We recall that as at last year, WAPCO still had the huge debt balance. We know that towards the end of last year, they divested their South African holdings in exchange for complete repayment of their parents of their related party loans, and they've been able to reduce their debt balance by around 153 billion naira, which is very significant. And so we're expecting them to. We're expecting that even though their EBIT and their EBITDA is going to reduce in the first half, overall bottom line wise, they should do better than their competitors.
Okay, great. We'll just have a few weeks more to wait to see these earnings coming through from the listed companies. Some big stories, interesting news from Northern Africa. Ali will be looking into this, but very quickly, what's the rundown here? The Egyptian stock market, as you saw, started the week on a positive note. The biggest market north of the continent, the authorities, the central bank issuing about 20 billion treasury bills auction. That was done on Sunday. And President El-Sisi says the country's economic reform programs and the harsh measures which was introduced help the citizens to withstand the coronavirus crisis. In neighboring Morocco, Total is released its first half 2020 financials. Meantime, the country is increasing import duties to strengthen local production. And Libya shocked the market over the weekend. A force majeure was declared on oil exports. Of course, oil exports was announced on Friday. I think it was between Saturday and Sunday. There's a force majeure. One of the warlords there says he's going to he's closing down the seaports and other facilities, which is bringing the whole oil story back to the front burner. Ali.
So Egypt, obviously, strong market on Sunday. President Sisi talking about how they withstood the COVID and the downturn. You know, we've spoken about Egypt's economic policy before. They devalued just over 4 years ago. The currency has, however, rebounded and corrected a lot of that devaluation. You know, my view, a lot of people have issues with Sisi's suppression of human rights and that kind of thing. But from an economic policy point of view, President Sisi cannot be faulted. He made decisions other African leaders dilly-dally and don't make. He made them, and you're seeing that feed through. The African Development Bank had Egypt growing at 2.6% in 2020, which I think will be probably the best rate of growth of any country in Africa. And I think that's a consequence of economic reforms, some of which he stovepiped through, but nevertheless, he put Egypt on a better footing. And therefore, I tend to agree with him. For investors, I think most of them are looking at the local currency market. They're thinking about that. You're getting very, very handsome yields. And given the uptick in inflation last month, it's unlikely that we're going to see more rate cuts after that very big 300 basis point rate cut we saw a few weeks ago. Morocco, just to touch on that, import duties to strengthen local production bias on. I think you've been doing that also in Nigeria. You've been seeking to create more production. Obviously, Morocco is more sophisticated than many of our African countries in terms of local production. I don't think I'm saying anything wrong there. But I think we're going to see more of this by African countries, not against each other because of the African Free Trade Agreement, but trying to create a wall around the continent when it comes to the dumping of goods onto the continent, especially in the economic downturn. the concern is we could become a dumping site for a lot of people.
So a quick one on Libya, Ali.
Yes, yes.
There's an OPEC meeting on Wednesday. So do you think Libya will be a major talking point, or they'll just shove it aside and say, well, let them go deal with the problem. We have other issues to deal with.
So I think people have factored in the extreme uncertainty in Libya. This is never settled down since the toppling of President Gaddafi more than a decade or close to a decade ago. You've got a huge proxy theater going on there. You've got the Turks in there, you've got the Egyptians in there. Egypt said this is a red line for them. Erdogan sees it as another red line for him. The Europeans largely have taken a step back. You've got President Putin, who's also a player in there. And I don't see it settling down very, very quickly. And therefore, I think we're going to continue to see a stop-start around the Libyan oil supply into the global markets. And I think OPEC largely accepts that situation as it stands.
So my final word, a question on this, Ali, is, do you think, or for how much longer do you think the Libyan economy and the markets has been damaged? Short, medium, long term?
Oh, I think it's been damaged in the short term, in the medium term, in the long term. It's one of the richest countries in Africa. It is one of the saddest situations I can think of. Whatever you thought of Colonel Gaddafi, he built a strong economy. He was very generous to the Libyan citizens in terms of the distribution of funds. And therefore, what has come after, this is just appalling. This is the destruction of one of the oldest civilizations on the continent. And I just feel everybody's there trying to snatch what they can without thinking what can be done in order to right-size this economy and get it back on track.
Let's leave it there for today. Thank you so much, both of you. Ijoma Onyeka, industrial goods analyst at Vertiva Capital Management. Thanks for cementing those numbers and the outlook from Vertiva on this very important sector, Nigeria's build-up of infrastructure. Thank you very much, and the outlook from that sector in the second quarter. Ali Khan Sacho, thank you very much again for some of your Pan-African views, North, East, West, and South. Thank you. See you again tomorrow. Have a great day, everyone. I am Bosin Omofaye, and I'll see you soon.